Good morning, everybody. Thank you, Carrie, for the wonderful introduction. It is great to be back in Australia, although I landed in Sydney just 3 hours ago. Wow. So forgive me if I'm very, very jet lagged, but I came from Washington, actually, from the IMF annual meetings where we had about a dozen or so meetings with central banks. So clearly the topic remains very, very consequential, and the demand for information for gold among central banks is as strong as ever. So let me move straight into my presentation because we don't have too much time. Sorry. All right, so I'm sure many of you are already aware of the World Gold Council, but maybe I'll explain a little bit about what we specifically do with central banks. So I run a central banks team that has about 4 people located globally, and we do basically 4 major types of engagement. One is the strategic level engagement with central bank leaders, their governors. That's what I was in Washington for last week, basically meeting with governors and senior delegations from central banks around the world. But the core of what we do is focused on reserve management, which is engaging with central banks at the working level for them to better understand how to use gold as a reserve asset, understanding the various dynamics of how gold works in a portfolio, and of course the sort of technical aspects of how do you trade and vault gold, etc. One additional work stream that's been increasingly more important for us is working with central banks on artisanal small-scale gold mining. Central banks have actually started to buy artisanal gold directly from domestic sources to both boost their gold reserves, but also to help out the local mining community and act as sort of a responsible buyer to try to move some of this gold supply away from irresponsible actors. And then finally, we do work on various other smaller work streams, the most prominent of which is helping central banks on accounting issues related to gold, because a lot of them have worries and concerns about how gold impacts their accounting. So just to remind you of how central banks sit in the overall spectrum of gold demand, so you have here the 4 main parts of gold demand. About a third is still gold jewelry, and 7% is gold's use as an industrial or technological input. 39%, so almost 40% now of gold demand is investment, both ETFs and physical bars and coins. And central banks are now 21%, so just over 1/5 of total gold demand. That's actually significantly larger than they were just a few years ago, which I believe the next slide might illustrate. So as was mentioned briefly already, central banks were actually net sellers of gold for many decades before the 2008 financial crisis. After the end of the Bretton Woods system, central banks were actually largely net sellers of gold throughout the 1980s, 90s, and early 2000s because gold had no formal function in the financial system anymore, and therefore a lot of legacy holders, mostly Western European central banks, felt that they didn't need to hold on to such large stocks of gold, so they were actually net sellers for a long period. That phenomenon changed after the 2008 financial crisis, and basically starting from 2010, central banks were net buyers of gold, and as they have been for the last 15 years now. This is actually convergence of 2 different phenomena. The Western central banks no longer sold gold in large quantities, but at the same time, starting roughly at the turn of the century, emerging market central banks became buyers of gold. And those 2 different phenomena converged in 2010, and since then, central banks as a whole, the whole community, have been net buyers of gold. This blue line shows the average amount of central bank gold buying between 2010 and 2021, which was roughly just under 500 tons a year. But since 2022, central banks have been buying over 1,000 tons of gold a year, which is why I say that their footprint in the gold market has doubled. Now, what happened in 2022, I think we all kind of remember recent history. The invasion of Ukraine by Russia started then, but more specifically for central banks, sanctions on the Bank of Russia were put in place at that time, which I think sent a bit of a shudder through the central bank community, because up to that point, most central banks thought that their foreign exchange reserves were similar to embassies. They were sovereign assets that couldn't really be touched by a foreign country. But 2022 showcased that that was not really the case. So since then, central banks have been buying over 1,000 tons of gold each for the last 3 years. And year to date for 2025, they've been just under 500 tons for the first half of this year. So again, on track for another very strong performance in 2025. So which central banks have been active in buying gold year to date? You can see that on this chart, both buyers and sellers as well. And what is surprising to a lot of observers is that Poland is actually the biggest single buyer at the central bank level. Most people think that maybe China or India is the largest buyer, but Poland is actually the biggest buyer. So the Polish central bank has been relatively candid about its reasons for buying gold. They say that gold is an important hedge for geopolitical risk. They also look at some of their neighboring countries to draw inspiration for how much gold they should have. And they set 20% as their target allocation of gold to total reserves, which they actually reached in about April or May of this year. And since that time, the Polish central bank has been inactive in buying gold. But a couple of weeks ago, they decided to raise their allocation level to 30% of gold to total reserves, which again is quite high, but it shows that they take gold very, very seriously. You can see as well some of their neighboring countries, so Central European central banks, have been quite active in adding gold as well. So besides Poland, you can see the Czech Republic, Serbia, Slovenia, and a couple of years ago, Hungary was actually one of the biggest buyers as well. So among this region of central banks, I think what is common among them, of course, is their proximity, their physical proximity to the war in Ukraine. And also, with the exception of Slovenia, none of these central banks are part of the Eurozone. So they don't have the ECB as an umbrella of protection for defending their currencies. They have to defend their own currencies themselves. Some other major buyers of note, you see Kazakhstan as a big buyer as well, as opposed to Uzbekistan, which is the biggest seller. These two central banks are not just physically close to each other, but both of them buy gold from locally produced large-scale gold mining. And typically speaking, when the gold price is high, like it is now, these central banks tend to sell gold to take advantage of the high gold price. But Uzbekistan is one of the biggest buyers this year. And the reason is, at the beginning of the year, their central bank governor said on the record that with Donald Trump coming back into power, he expected a lot more instability in global markets, so it was wiser to hold on to more gold than they typically would. And I think that that bet has proven to be the right bet. In Kazakhstan's case, gold has actually, of course, gone up a lot. China, of course, is on there. They're a major buyer as well, along with Turkey and India. But another region where we've been seeing a lot of buying is the Middle East. So you see Qatar, Egypt, and Jordan on there. Iraq also announced a purchase. Yes, they're on there as well. A relatively recent purchase too. And in years past, the UAE was also a big buyer. So that's another region where we see a lot of central banks being very active in buying gold as well. On the selling side, I mentioned Uzbekistan already. Singapore is the second biggest seller. They haven't put out any specific reason for their sale. The only reason I can think of is they bought a lot of gold in the last 2 years. They actually doubled their gold holdings, and now gold might be a little bit above their optimal holding level, so they decided to trim a little bit. Russia and Germany are both on there as well, which might raise some eyebrows, but in both of those cases, both of those central banks have long-standing coin programs where they sell gold from their official reserves as commemorative coins to the public. So I think that those two sales are nothing more beyond that. Now, one thing I should note, though, is that there is a big gap between what the World Gold Council thinks central banks are buying, the level of gold, versus what central banks have been reporting to the IMF in terms of their official gold purchases. You can see that since 2022, there's been a very big gap, actually, between our estimates of central bank gold buying and what central banks have been reporting. So how do we estimate how much gold the official sector is buying? We work with a partner company called Metals Focus that actually looks at things like customs data, trade flows, the way that gold was bought, and they're able to roughly triangulate how much gold the official sector is buying. Now, we don't take their numbers at face value, of course. We do get a second opinion. So we ask market participants, are these roughly the volumes of gold being transacted among the official sector? And they have come back and they said that, yes, this is roughly the volume they're seeing. So we have a pretty high degree of confidence that our numbers are right. So basically what this means is that the official sector is vastly underreporting the amount of gold that they're buying compared to our estimates. And a couple of explanations for this. Our estimates capture sovereign wealth fund gold buying as well. And the only sovereign wealth fund that publicly states its gold position was actually the second biggest buyer on this chart. Sorry, third biggest buyer, Azerbaijan. That's not the Central Bank of Azerbaijan. That's the sovereign wealth fund, the state oil fund of Azerbaijan, or SOFAZ. Unfortunately for us, they're the only sovereign wealth fund that discloses how much gold that they have. But anecdotally speaking, we know that there are many other sovereign wealth funds out there who are buying gold. But I don't think that explains the entirety of this unreported amount. We do think that there are a number of central banks out there who are buying gold but not reporting it publicly. So moving on, the rest of the presentation is going to focus on the future of central bank gold buying. The World Gold Council does an annual survey of central bank gold buying This year was the 8th year we've done it, and also the largest year in terms of the number of responses. We had 73 respondents, which is roughly half of the entire central bank community. And some of the key findings are the future of the US dollar versus the future of gold in terms of their proportion of total reserves. Basically, they're kind of mirror opposite images of each other. If you look at the 2025 figures and you add moderately higher or significantly higher for gold on the left-hand side, you get to roughly 75%. So about 75% of central banks polled think that gold is going to have a larger share of total global reserves in 5 years' time. If you look at the dollar and you add significantly lower plus moderately lower, you also get to about 75%. So almost the exact opposite. So roughly 3/4 of central banks think that think that the dollar is going to have a lower proportion of total reserves going forward in 5 years' time. Now, we asked central banks who hold gold, basically, why do you think gold is an important part of your reserve portfolio? What characteristics of gold make it an important part of your reserve portfolio to hold? And this year, gold's performance during times of crisis is the most cited factor. Roughly 80-something percent, 85% of central banks cite it as a relevant factor, which makes a lot of sense. If you think about the crises we've all lived through in the past 5 years, be it COVID or the invasion of Ukraine or now the trade uncertainty, gold has done very well throughout all those crises. So it makes sense that central banks are viewing that characteristic as a reason for why they should hold gold. The only other thing I'll point out on this slide is the fourth factor, which is our gold holdings is a historical position. I point that out because in previous surveys that was always the number one reason, and it's now fallen to number 4, which means that central banks as a whole are looking at gold as a much more active and sort of lively part of their reserve portfolios, not purely looking at it from the lens of it being a historical legacy, but looking at all those other factors that have now exceeded historical position as an important reason to hold gold. Now, this is probably the most important slide that I'll show today, which is simply, what is your central bank's plan for gold in the coming 12 months? Do you plan to buy gold, sell gold, or do nothing? 43% of respondents said that they have plans to add gold. 57% said they don't have plans to change at all, and no one has plans to sell. So this is the highest level recorded since asking this question in our survey. And of course, you have to remember the background, which is that the gold price has done very, very well, and also central banks have already bought a lot of gold. But despite those two factors, the level of interest, the sentiment for buying more gold is stronger than ever. It's at a record high. So you can see that central banks are still very, very keen on adding more gold despite already having a lot of gold, and that even with the gold price being very high, we don't really anticipate widespread gold selling among central banks. Where I hesitate to make a direct connection is saying that this is going to lead to another historic level of central bank gold buying in terms of tonnage. I think that this year compared to last year, we've already seeing a bit of a slowdown, although we do think that central banks are still going to be very, very big buyers of gold this year. What I do think this is going to lead to is more widespread gold buying, so maybe central banks that have not been active in buying gold before or have been dormant for a number of years, or maybe very, very small central banks who traditionally have not turned to gold. They might come out as being big buyers of gold going forward. In terms of the rationale for gold buying, we asked that 43% who said they have plans to buy gold, basically, why are you buying gold? And the number one reason is part of a reserves diversification policy, which doesn't really say much. It's a very generic answer. They basically want to diversify their portfolios. But the second most cited reason is rising political risk in advanced economies. So you can read that as rising political risk in the US or in Europe. And certainly we have seen that as a major factor this year so far. And I think central banks especially are very sensitive to rising levels of political risk. So that's the second most highly cited reason for why central banks are adding gold. I also want to point you to more purchases from a domestic gold buying program, which is kind of about 1/3 up. But over half of central banks surveyed said that that was a reason that they're planning to buy gold. And that points to the work that we're doing on artisanal small-scale gold buying as well. There are more and more central banks that are turning to domestic gold production as a source for buying gold. And we think that with the higher gold price, it's just going to prompt more central banks to add gold through that channel as well. And then I think this is near the end of my presentation, which is where do you vault gold if you're storing gold? The Bank of England is still the most popular place for central banks to store gold, but as you can see in this year's survey, domestic gold storage has increased significantly in terms of popularity. And we think this points overall to the geopolitical environment, but also some domestic concerns as well. In a lot of countries that I talk to among central banks, they're facing a lot of domestic political pressure to move gold either back home or to diversify where they store their gold, because they're seeing rising political risk in the US or the UK or other places where gold is traditionally stored. So we probably are going to see more gold repatriation going forward, central banks moving gold away from London and away from New York, either back home or diversifying where they store gold overseas as well. And I think this points, again, to the broader political environment, both the global one, where central banks are trying to navigate various geopolitical risks, the political risk of where they store their gold as well, but also the domestic political sentiment in a lot of these countries as well. We have conversations with a lot of central banks where they say, yes, there's pressure coming from their government and pressure coming from their citizens for them to add more gold. And, although I don't think this is a good reason for adding gold, I think central banks should, carefully evaluate why gold fits into their portfolio. It does show that there's just enormous interest in gold overall, and that central banks are responding to these broader global trends for their decision to add gold. So I think I'll leave it there. That's the end of my presentation, but happy to take questions afterwards as well. So thank you very much.
No, you're going to take questions right now.
There I am. Oh, yeah. Q&A. Okay.
We're going to go sit down there.
All right.
Because you've got a few more minutes.
I
So
do.
go and sit down there and let's have a chat because we've got some time. Thank you for the presentation, and I love what the World Gold Council does. But Poland, 20 up to 30%. Are you seeing that just with Poland, or is that across the board? I mean, there is strengthening demand with the central banks. What do you think the longer term outlook? Is this a short term strengthening the balance sheet, then we'll just go back to, I guess, a normalization, or is this a long term change overall? It's on.
That's a really good question. Poland is unusually forthcoming for a central bank.
Yes.
For its reserve management strategies. Most central banks are very, very tight-lipped about what their plans are for reserves. So I think we can point to the central bank survey that we did.
Yep.
Clearly there is more appetite, at least for the coming year. In the long run, though, I think the appetite will still be there because there's actually a lot more room, especially among emerging market central banks, to grow gold as a proportion of total reserves. Emerging market central banks, as a collective, probably have between 5 and 10% of their reserves in gold. But, going up to 20, 30% like Poland does, that's a lot more room for them to add more. So I think there is more room.
Why should anyone in this audience care what the central banks are doing?
Two main reasons. They're very big buyers of gold, for one. So what they do does directly impact the gold price. And I do think that central banks have been a major reason for why the gold price has gone up to the way it has in the past 3 years as well. Also, we've seen that, especially in the past couple of months when gold was kind of range-bound between 3003 and 3005, whenever it dipped below 3003, it rebounded pretty quickly. And anecdotally speaking, when I talk to people in the market, they say there were a bunch of central banks camped out at around the 3,300 level waiting to purchase, right?
To pounce.
Yeah. A lot of central banks want to add more gold, but of course everyone's a little bit nervous with the price right now. And you can imagine with these public sector investors, they're not just responding to pure financial factors. I alluded to this already. They face a lot of political pressure as well. So if they make the wrong choice, they're going to be hauled in front of their parliaments and asked a lot of tough questions, and nobody wants that, of course. So I think that central banks do want to add more gold, but they're looking opportunistically at windows to buy in. So I think that's going to be a lever of support for the gold market. I mentioned two reasons. The other reason is, of course, central banks have a lot of signaling power. They're very visible. So in certain countries, for instance, when the central bank starts buying, that's kind of not a signal, but a reminder to a lot of people in that country, gold is actually important. And if it's good enough for my central bank, then it's good enough for me. So then they start, lining up at gold shops and start buying gold as well.
You mentioned that central banks keep their information quite tight to their chest, but the World Gold Council gets all this data. How confident are you of the accuracy? And I talk specifically places like China. They're not forthcoming with their information. So how are you I guess, confident in the data that you put together?
So the data on total gold buying, that is an estimate, of course, but
Right.
we've spoken to market participants to get second opinions, and although I can't say we're going to be correct in the exact ton, I do think that we are in the right neighborhood of buying when you actually look at other sources of data that we corroborate just to make sure our data is in the right neighborhood. On the central bank survey, we have about half of the entire central bank community responding, but of course that means there's half that's not responding.
Right.
But what we have done is done some internal analysis to make sure that our survey sample is broadly representative of central banks overall, both geographically, in terms of the AUM, in terms of the types of currency regimes they run, and we're pretty confident that we have a good sort of representative sample of the central bank community overall.
And a couple more questions. How often do you do the surveys?
Once a year.
Every year, okay. And again, for the audience out there, the World Gold Council, what other data, what other elements can you share that would potentially make them either better investors or more aware? Because I think the World Gold Council is a great source of information, and I think it'd be really good for you just to share with our audience what else you offer.
Yeah, absolutely. You know, it's our mission to improve and grow understanding of gold and awareness of gold. So we have a lot of research on our website. We have a lot of publications on what happened in gold in the past quarter, for instance. We have a lot of tools as well that either help you to value gold or help you to see what's been moving the gold market in terms of, you know, this factor, that factor, what's contributed to gold price movements in the last couple of weeks. So the best part about all this is everything we do is for free.
I know. It's my go-to place. I love it.
The only cost is signing up on the website, basically.
Yeah.
And then you can have access to all this data. It's really our mission to improve understanding of gold. So we want everybody as wide as possible to have this information.
Okay, I'm going to ask you a cheeky question, which is, Shaokai, what is your long-term outlook? Do you see this as a long-term structural change, or are we in a cycle? Final question.
We don't forecast the gold price, of course.
I know you don't.
But in terms of the underlying demand, I do think that we are what I'm calling the fourth structural change for gold. The first three were the growth of emerging market countries like China and India over the past 25 years. Now they're, of course, very big buyers of gold. The second was the emergence of gold ETFs about 20 years ago, which really revolutionized how investors could access gold. The third was the conversion of central banks from net sellers to net buyers. The fourth one, I think, is just this question about the global structure, both the financial structure but also the political structure, and whether we're at sort of the cusp of a major change in that structure, and whether or not you need some gold to be able to see you through potentially turbulent times, whether at the central bank level, the institutional investor level, or the personal level as well. And I think that change is coming, and it's important for people to understand that and to prepare themselves for it.
Ladies and gentlemen, please thank Shaokai from the World Gold Council. Thank you so much.